So is it the right move for you, taking your 3 or 4% interest rate and refinancing it to pay off your debt? Well, let's get into it. Only you can answer that question and figure out your finances and what makes sense to you. So just scraping by and you're stressed out about money, paying, week to week, only have a couple hours left at the end of the week or the end of the month, and it's really stressful. This may be the solution for you. We're going to go through today on how maybe you can get out of being buried on your high interest debt for your credit cards, personal loans, car loans. Because a lot of these loans are anywhere between 8 and 30%. The banks and credit card companies are just not our friends, right? 30% on a credit card. It's crazy. A lot of these car loans out there recently have been, 9, 10, 11, 12, 13, 14%. But if you have equity in your home, it may be a smart move to do this. Yeah, so refinancing your mortgage might be the answer to relieve that stress. You're seeing that 3% or 4% mortgage rate and you're like, oh my God, that's so low. We'll probably never see these rates again, which is, in our lifetime, I'll be surprised if they get down, near that 4 or less range. So, like I said, this might be the answer for you to relieve that stress. I mean, I've been through it personally. I've owned some businesses and struggled and been through stress. I've actually had to claim bankruptcy about 10 years ago from a bar restaurant I own. And the bills piling up and the week-to-week stress of that is overwhelming sometimes, man. It really can tear your family apart and really hurt your health. So you really want to relieve the stress. And if this may be your answer, just to take the pressure off. So my name's E.J. Glenn. I'm a problem solver by nature. I am always looking for solutions to problems. Like I just said, as a former bar restaurant owner, the amount of problems and the bills piling up I faced on a daily basis really forced me to look at problems from a different perspective and sit down and be analytical about them and try to take some of the emotion out of it, which is very hard, and come up with a solution to figure out how to, the bills never stop coming in. We all know that. And when you're a business owner, that's like that on steroids. So if you're going to watch this to the end, I want to give you some ideas, and maybe this works for you, maybe it doesn't. But I'm here to be your consultant, counselor. It might not be the right fit for you, and I'll tell you that. I'm not here to sell you to refinance your mortgage with me, but it might be the right answer, it might not be. So let's get into this a little further. You may have seen people on social media saying it's crazy to refinance a 3% loan. This drives me crazy. They have no idea what you're going through financially, what your situation is. And they make blanket statements like that. So in this presentation, I'll show you a real example of how I help someone save a lot of money per month by just refinancing their loan and taking that pressure off. Here are some of the estimates from just yesterday. LendingTree shows the average APR for a credit card today is 24.59%. That might not reflect the average across all existing cards, but that's the average rate. Forbes has it at 27.79%. And Investopedia has that, the typical average rate of 300 different credit card companies is 24.37%. That's a massive amount of interest paid. So here's an example of paying your minimum balance and your actual amount that you owe went up. $10,000 balance, 27.79% rate, you're paying $200 minimum. How could your balance actually go up $29? Well, this is how credit card companies do it, right? And in this example, it's compounding interest daily. So paying that minimum doesn't really pay anything down until the long run of 8, 9, 10 years. So this is why credit cards take so long to pay off, because the interest is compounding daily. And without making large payments towards your balance or paying it completely off, you're going to pay over $8,000 a year in interest. You're going to pay double what you borrow for a $10,000 loan pretty much. So this is the trap of credit cards and how devastating it can be to your finances, right? And how long it can take to pay off. So this is crazy what the credit card companies do and the frustration you can feel with this. So let's do the math on what is called a blended interest rate, right? So what this means is this. Well, your mortgage rate's 3%, your credit cards are 27, your car payment's 9. So you add all these together, whatever miscellaneous, maybe you have some, department store credit cards or whatever, is 10%. So if you add all those interest rates up, you get 63%. Well, there's 6 different types here. So you divide that by 6. Your blended rate would be 10.5% across all your debts. So if you were to refinance from 3% to 6.5% across all your debts, you're literally saving 4% in interest. And then all this stuff is paid off if you have the ability to do that and you have enough equity in your home to get rid of all these payments. And in this is a real world example of how I help someone, with their refinance of up to 7.5% from a 3% rate. And here you go. The credit card payments for $500 a month. They're, like I said, they're not exact numbers down to the penny, but you get the idea. But the difference is almost $1,900 a month, right? I mean, that's real dollars it's basically, $500 a week that you can put back in your pocket. So does that mortgage, 3%, protecting that 3% mortgage rate make sense in this scenario? I know the pressure of paying bills, like I said before, with, being a business owner, and that affected me at my household and at my business. So the stress was, wow, it was really overwhelming, and just the stress and overwhelming of the bills just not stop coming, the phone not stop ringing when you're struggling to get by. So I understand all that. So this could be an answer for you, right? But all you need to do is sit down, figure out the math. Does it make sense? Obviously in this scenario it made sense because these people are saving a lot of money. And if they just wanted to continue to make their car payments, well, look, they're still saving, almost $900 a month, putting back in their pocket. That's about $225 a week. That's not coming out of your paychecks. The cost of everything has went up, right? Food, all these interest rates are through the roof these days. Going out, your kids, whatever it may be, everything is more expensive today. So freeing up some cash, if you're struggling and you have this scenario, really makes sense for you. Maybe, you have to figure it out for yourself. And I'm here to answer any questions you might have on that. So, right, I just said that. This has to make sense to you and not to me. Someday everything will make perfect sense. And if you take on something like this and refinance and take that pressure off, there are some pros and cons to this. And we're going to go through them right now. Right? Well, the pros, right? Simple. You save that much money per month, or whatever it may be. Maybe it's $500. Maybe it's as much as that scenario I showed you, where it was almost $2,000 a month. A significant amount of money. $500 a month savings might make sense to you. I don't know your situation. Only you do. So if you're going to do this strategy, there's one thing you really need to do, and you got to be disciplined to not get back into this where I start a year later. Oh, great, things are going great. Pull out the credit card, start maxing it out again. Oh, wow, you know what? Let me trade my car in and go take another, $800 a month car payment. If you can afford it at that time without going into serious debt, fine. If things have gotten better for you, fine. But falling back in that trap is one of the big cons because it happens over and over and over again. So there's the cons. And one of the other one would be, if you've been in your house a while and say you paid your mortgage for 10 years and you're going to refinance to a new 30-year loan, well, now, you signed on for another 30-year loan, so you're basically paying almost you're paying a 40-year mortgage at that point. But, does that help you day to day in your daily life and in your wallet and your bills? And is your stress added because of your bills? Like I said, you're the only one that can answer that stuff. And I'm here to walk you through that. So there are the cons. And the pros are simple. You're putting more money back in your pocket. If the rates continue to fall and you get in a rate today at 7%, pay off all your debt, and then in a year the rates drop to 5.5 or 5, you can refinance again and save even more money. But the discipline not to fall into this trap again of using your credit cards for everything or taking on all this revolving high interest debt, You need the discipline to do that, or this doesn't really make sense. So you have to be disciplined with that, or you're just going to fall into the same trap. And I'm not advising anybody to do that, right? Once you get your finances in order and all that, you got to be disciplined and you got to be smart about how you're going to use your money. I'm not saying you can never use a credit card again. I don't mean it that way. All I'm saying is you can't get yourself buried that got you in this situation already, so that's the pros and cons. Does this strategy work? Well, yes, this strategy works. Why? Because you're saving money per month. And with that blended interest rate that I showed you, most people don't think about it that way. They're thinking about, oh wow, my mortgage is only 3%. My mortgage payment's only $1,500 a month, or whatever it may be. But it's going to go up to $2,000 or $2,200 a month. But you see in that example, the blended interest rate was paying 10.5% in that example. So paying off all that high interest debt and bringing up your mortgage interest rate, because that's the equity in your home. That's the real dollars that you can use. It might make sense, right? But this strategy can work if you're in the right situation, you have some discipline, and get yourself back on track financially and in a secure, stress-free environment financially. So my name's EJ Glenn from Your Team, Your Town. Here's my contact information. There's my website. Like I said, I'm a licensed loan officer and also a licensed real estate agent in Pennsylvania and New Jersey. So I'm here to help you. Consultation, we could talk through it. You can ask me any questions you want. Ask me questions down in the comments below. Like, subscribe, share this video with people you might think need help with this. And just to get your questions answered. I'm a no pressure, guy. I'm not a hard sales guy trying to talk you into anything. I'm here to be your consultant and help you make the best decision that'll work for you. So thank you guys. You have a great day. And remember, like, subscribe, comment. My name's EJ Glenn, Your Team, Your